Thank you for tuning in to another edition of the Vulcan Report. Right now we're taking a look at the chart of the US dollar index. As you can see, the US dollar index broke out of a basing pattern, and at the end of August we rallied and we put in a new high here at the long-term trendline resistance. Finally got above it and broke out here, and then putting an engulfing bearish line here as of the close. So we're anticipating now that it's going to test the next support level at 78.32, and then from there we have a consolidation range between 78.32 and 76.52. 76.52 must hold in order to keep the bull market momentum strong in the US dollar index. But if we break below the 78.32 level, then it's a good possibility that it's going to have a hard time getting back above that that resistance zone. So we'll see. Based on what we're seeing now in the technicals, it looks like a bearish pattern is getting ready to set up in the US dollar index. Now I know that there's a lot going on the fundamental side, looking like a mad rush to the USA, using the USA as a safe haven. People wanting dollars and wanting US government bonds. That's because of the problems going on in the Eurozone. So the Euro is going to really pretty much tell the story. I think the Euro is a much better indicator of overall global market direction than the US dollar index. So we'll have to keep an eye on that and see where we go from here. All right, taking a look now at the Dow Jones futures. You can see we're still trading below the Kumo cloud, which is bearish. You see that the market put in a reversal here, and it's trying to now take out the resistance line here, this red line here, which is at 11,087. Next resistance from here is 11,272, 276. And then the bottom of the Kumo cloud is 11,309, and the top of the Kumo cloud will be 11,577. And then we have a final resistance point in the Dow at 11,620, which is this purple line right here. This is the long-term trend line resistance. So basically, if you're short in the Dow futures, your major stop should be at the next resistance zone, which is at 11,000. It'll range between 11,262 and 11,279. That's where your stop should be if you are short in the Dow. Okay, if that stop is taken out, that would lead us to a bullish sign and put in a major bottom and a major reversal, and you would want to switch and go long from there. And you should be able to pick up a gain from there. If we go to 11,262, the momentum will be on our side to reverse. The system will reverse from short to long, because from 11,262, the market's going to desperately try to get back up to the 11,620. That's where the trend line resistance is. Markets like to maintain equilibrium, so the further they get away from that trend line, the more anxious they are to move back to it. So when prices get below it, they want to get back and test it and get back above it. And then when it gets too far above it, they want to pull back and get back to it and test it. So it's like a magnet. It likes to pull prices in that direction. So again, the stop in reverse for all shorts in the Dow futures will be at 11,262. And you'll want to reverse and ride it back up and be able to get back up to 11,620. And if the market closes above that, then you're actually in line at this point for a 1,000 point reversal rally from 11,620 back up to the 12,400 to 12,600 level in the Dow, because the trend would have reversed from bearish to actually bullish and would be in a new bull market in the stock indexes. All right, now I know there's a lot of fundamental information out there. The Greece situation with Greece defaulting, and then all the pigs and pretty much everything in Europe, including Germany. So we have that, and then we know our own U.S. situation is very dire, very bleak, very bad. But sometimes the markets don't care. And we have to always keep in mind, too, trading 101. We take responsibility for our wins, and we take responsibility for our losses. So if we take a loss and we reverse and then we align ourselves with the market, that's the cost of doing business. So we just do what we do. You make back your money, by consistently trading in the direction of the market. When you're wrong, you stop and reverse and line yourself up with the market. It's just that simple. But I want to put an added note here. Just remember, right now we're dealing with blatant U.S. intervention, Fed intervention, and manipulation in all financial markets. Everything from the currencies to the gold and the silver to the U.S. stock market. Massive amounts of government and Federal Reserve money is flowing into the markets to keep them afloat. They want to keep the markets bullish. The Fed already announced that they're going to put hundreds of billions of dollars into the U.S. Treasury market to keep that afloat. All right, because they know that if that collapses, then we have no hope. All right, so go the bonds, so goes the U.S. dollar. Period. We already had a down rating, a credit downgrade. We don't need for the bond market to implode, because if it does, there is no more safe haven other than that. The U.S. is still looked upon as the world currency, the global currency, the one world currency. It is the U.S. dollar. Like it, love it, or hate it, it is a fact. We already have a one world currency, and it's the U.S. dollar. All right, that's just how it is. That's what it is. It is what it is, and unless they come up with another form of currency to replace the dollar, that's the only way we'll get another world currency. But the U.S. dollar is the one world global currency. Even though other currencies are allowed to exist, other fiat forms of fiat, the dollar is king. Okay. So until that changes, we have to do what the markets do. Whether they make sense or not, whether they're being manipulated or not, it doesn't matter. Now, our opinion is that the market is going to remain bearish, and that any rallies that we see will be met with heavy selling, and that they're fattening up the market for the slaughter, fattening up the calf. And then after you fatten it up and bubble it up enough, then you collapse it, just like we did here. And let's take a look at that again. Bubbled the market up to new highs, and then we crushed it. I see this pattern playing out again and again. Rally, crush, rally, crush, rally, and then crush again to new lows. So wherever we end up at this current rally, I see us crashing down and taking out this support low. You can see that the indicator here is pointing down, which means that the higher we go, the harder we're going to fall. And that's just a factor. We can't get around it. Even if you take a look at here at the chart of the Nasdaq, you see its trend is questionable because it's caught in the cumulative cloud of death. We need to close outside that cloud to put in a new bull market pattern for the Nasdaq. And if the Nasdaq can do it, the next line of resistance for the Nasdaq is at 2277.5. If it can get above that, it won't see resistance again until it gets to 2334. Once it hits 2334, if it can close above it, then the Nasdaq should run 100 points from there and get back up and actually break out beyond 2450. But that's saying a lot. And all we need is for one news item to come out, and that will change everything. So we'll obey the system. If it gives us a buy, tells us to reverse from shorting the indexes to buying them, we will obey, and we will go long and buy until that upside exhausts itself and fails and gets bearish again. So we're just going to constantly be moving with the market. And that's pretty much, my take on it. Okay, I want to take a few moments now to just go over the sheet here. If you recall, the sheet does have a user guide, and it also has an alerts tab, which is this tab here. Okay, this alert tab gives you commentary so that you can get an idea of how the system is looking at the market. Let's just take the Australian dollar here at the top just as an example. If you're in the Kumo cloud of death, it'll tell you. If there's a rally alert, it'll tell you. If there's a crash alert, it'll tell you. And then, of course, they ask the Vulcan report commentary. And you'll see here it says that this is just an example, so you can get an idea of how the system reads. All right, and so for example, it says here that the trend is still bearish in the Australian dollar, and that the market favors the bearish bias. And it tells you to use a stop and reverse if the rally alert is given, and or place both long and short trades if both buy and sell signals are given at the same time. So you have that there to go by in case you are unfamiliar or confused on what to do. Back to the quick sheet. As you can see, the first several lines are on the bull side. So lines C through H is your bullish system. All right. If there's an uptrend and there's a 1 there, remember you're looking at column D to go long. Column C is your pulse wave. If the pulse wave price is above the your long entry price, then you'll look to this price here to add to the position. And then you have your intraday resistance. You can use this as a profit target to take profit on the position. And then of course here your stop and reverse. This is where you're going to place your stop and reverse. One note is that if you have a both long and a short signal given at the same time, what you're going to want to do, instead of using this recommended stop and reverse, you're going to use your sell short trigger as your stop. So you put in 2 tickets. In the Australian dollar, using an example, you would buy it at 97.46 and put your stop here at 95.15. All right, and then you're going to put also another ticket in to sell short at 95.15 and put your stop at 97.46. That way, whatever one is triggered first will put you in the market. And if you're stopped out, the system will automatically stop and reverse you into the other order. So it's pretty simple. Just get in the habit of placing both tickets so you can save yourself a lot of grief. Sometimes it's hard to catch a market when it's running real fast, and it's better to have the orders already placed in the market so you can catch it, okay? So that's pretty much it. And remember, take what you can and give nothing back. Be encouraged.